Thanks for tuning in. I see you're passionate about your future, so we're going to dive right into it. So in this video today, what I will be covering is something called HTF, or higher time frame confluence. And basically what that is just zooming out to your larger time frames and going off of their levels as confluence. So I really wanted to break that down today and show how I use higher time frame confluence for my setups and how I break it down and how I read it, so that we can get a clearer understanding of how to implement the higher time frame analysis to get better RR and overall just seeing clearer moves. So we have Euro CAD here on the 15-minute time frame. This was January 3rd, 2023. So this was also in this first week of trading as well. As you can see, we came right to our sesh, and right off TOP, you can see that we have aggressive buying, which is demand, right? And there is a gap right here as well. So we could go ahead and mark up our supply and demand zones with our zones. So we will mark this up here, letting us know that this is a 15-minute demand. Well, this is what we'll do. We just put demand first. So this is our demand, right? This is our demand. Let's see here. And another zone that I also see, obviously, is this aggressive selling here. Hard, aggressive, nothing but red candles in this area. I mean, just a deep sell. And there is also a 15-minute setup over here as well. Right, it explodes out, never pulls back, and it leaves this gap in the market right there. So at this point, we understand that we have a 15-minute demand and also a 15-minute supply. And when I seen this setup, or really whenever actually I mark up my setup or my strategy on the 15-minute time frame, sometimes I like to zoom out to the higher time frames just to get or to clear up some of the noise that lower time frames can cause. So basically just to get an overview of the market, see the bigger picture, know where I'm at, see what's really going on, instead of having tunnel vision on one time frame, especially a lower time frame with all that noise. So at this point, what I would love to do, and what I majority of the time will do, is zoom out after I mark up my 15-minute zones to the 1 hour time frame and see what key levels are presented at that time frame. So at the 15-minute time frame, we know we had those two zones, those two key areas, supply and demand. So on this 1 hour time frame, we see we still have this supply, right? Aggressive selling, it leaves this gap. This candle after the move never pulls back. So this is a gap in the market. So this is a high probability supply setup on the 1 hour time frame. And it is a 15-minute supply, high probability setup on the 15-minute time frame. So the 1 hour and the 15-minute is lining up. So this is a very, very, very important key area. Very important key area. When you see that you have your time frames lining up like that, as you zooming in, it's still showing you the same setup. That's letting you know that that is a very, very important key area. Very important key area. So whenever my 15-minute and my 1 hour lines up with a setup, I automatically believe that there's a higher chance to win, because the higher time frames has less noise. So more than likely that move is the clear move, which is this supply. And also, if you look right here, we still have this demand as well. So let's see, let me show you what I like to do here. So basically, just so you get a clear understanding, we're going to mark it up from the 1 hour time frame first and zoom in. So we have a 1 hour supply, right? Aggressive selling, explodes out, the candle after the move never pulls back. So we will mark up our supply with that zone, and we'll put 1 hour supply there to let us know that this is not a 15-minute supply. This is a 1 hour supply. So when we're on the 15-minute time frame, we will be seeing that 1 hour supply note there, knowing that even though we're on the 15-minute time frame, this is a 1 hour zone or a 1 hour setup. So we had this demand as well. Price explodes up. The next candle never pulls back to the candle before the move, and it leaves a large gap, huge gap. So we also have a 1 hour demand as well. So we have to put 1 hour demand to let us know this is not 15-minute zones. So now at this point, when we zoom back into our time frame, our 15-minute time frame, you will see that the zones still line up to where we had them, right? There's still a gap right here. There's still a gap right there, right? There's still a gap. So this 1 hour supply and 1 hour demand are very strong key areas, very, very strong. So at this point, I'm just waiting on price to pick a key area. You know, we never want to pick and choose the key area. We want price to pick and choose the key area. So wherever it chooses, more than likely it's going to head towards or to the next zone. So if it hits this, if price chooses the supply first, more than likely it's going to head towards or to the 1 hour demand, and vice versa. So we're just waiting at this point, and what we can do is let price play out here, see exactly which zone it picks. Right there, we can pause. We see that our zone just got hit on our 15-minute time frame. So the 15-minute time frame just tapped into the 1 hour supply. So we're still zooming in more to the 5-minute, right? Like we do to get our sniper entry. You got to realize at this point, we're scaling down an hour setup to a 5-minute entry. I mean, you can't get more sniper than this. You cannot get more sniper than this. I repeat, you cannot get more sniper than this. This is a 1 hour setup, zoomed into a 15-minute, and then zoomed into a 5-minute for our sniper entry. So we know that our price just touched our key area. So this is a supply. So we're waiting for the break of the low of the candle to get in as price goes down to the downside for the sell, right? So price hasn't broke yet, or the candle hasn't broke the low yet. It's just touched. So the next candle that prints has to break that low of the previous candle for us to want to get in. So with that being said, we will continue to let price. Wow. So obviously this big red bearish engulfing candle obviously just broke the low of his previous candle. I mean, destroyed it. So we will be getting in right here, right at the break, right? Stop loss and everything is still the same. Don't get confused. Everything is still the same as usual, just that we zoomed out and now we know that this is a 1 hour zone and not a 15-minute zone, right? So we just know that our key area is more strong. We just know our key area is very, very important. So more than likely it's going to respect, and if it does, you will see how many pips usually setup like this throws, a higher time frame setup throws. So we just got in. We have our stop loss. We have our 1-to-1, which gets blasted through. I mean, blasted through. 1-to-1 is done. You can move your stop loss to break even if you would like, or trail your positions, however you want to do it. But obviously, price is going to head to fill in these gaps to head towards our 1 hour demand, right? And also our 15-minute demand. So you know what I like to do is go to our 15-minute. And we can mark up where the 15-minute break happened. This is where the 15-minute people are getting in. We can mark up there 1-to-1. Stop loss is about 18 pips. So their 1-to-1 got destroyed in one candle as well. So we all just won this setup at this point. Everybody is a winner. Congratulations. So we're on our 5-minute, and we do have our 15-minute zones marked up where they enter at. In their 1-to-1, we saw that their 1-to-1 got destroyed, and now we're just waiting to see where price would like to go and how long we can hold this trade and how much bread we're going to receive. And you see the type of aggressiveness you get when it's a higher time frame confluence, right? When you line that 1 hour up with the 15-minute, when they both match, you get aggressive moves like this. I mean, I mean, wow, this is just a beautiful, beautiful drop, a beautiful, beautiful sale. If you just would have took it to when it pulled back, that's a 1 to 10 RR right there. Right there, 1 to 10 RR. Also on the pro tip, 0 drawdown, obviously. So this is the power of higher time frame Confluence. I mean, this one setup alone is 70 pips. You can be done for the week. Some people have weekly pip goals, right? I've heard 70 pips is a lot of traders pip goal. You're done in one setup. And if you twin traded this, which you should, and we will get into that, then you're up 140 pips. You're definitely done for the week. You could be at least, you know? So having these higher time frame Confluences, like the 1 hour lining up with the 15-minute, and then going down to the 5-minute and getting that sniper entry on a 1 hour setup is very, very key. Very, very key. So I just want to show you guys this again because it could kind of be hard to see, right? So again, we have a 1 hour demand. Price never comes back and fills in this gap that price left when it started this aggressive buying, right? And then we have this supply, this aggressive selling, left this gap right here. Price never pulled back. And then if we go to the 15-minute, we see that those same 1 hour zones, the demand has a gap. So this is a 15-minute setup inside of a 1 hour setup, right? And the same for the supply. Is still there, a gap right here. So this is a 15-minute supply inside of a 1 hour supply. So that automatically intensifies your setup like times 100. I mean, look how aggressive this drop is. Very, very aggressive. So that's all I got for you guys. Sometimes, you know, price will go to the zone. Sometimes it won't. We already understanding that. You can't be gritty after getting 70 pips, 1 to 10. So if you wanted to go to the zone, that's just your prerogative. But we see, you know, that the higher time frame is going to create these strong ass moves. So I just wanted to go over that with you guys today so you be able to see and recognize these moves, know to zoom out so you can get a bigger, clearer picture, clear up some of that noise that the smaller time frames can cause. And if your higher time frame, whatever chart you're using, whatever time frame you're using, if your higher time frame matches with your lower time frame, more than likely that is the clear setup. So that's exactly what I'm doing here. It's exactly what I preached here. We had a 1 hour demand, and then we had a 15-minute demand inside of that 1 hour demand. We had a 1 hour supply and a 15-minute supply inside of that 1 hour supply. Price chose to come to the 1 hour supply, threw us right in to head towards the 1 hour demand to fill in some of them gaps. And again, you see how aggressive that drop was. So if you like what we went over today, please comment, like, subscribe, share, hit that bell notification. Definitely want to be notified when I drop my next vid. Hit the comments, right? Let me know what time frames you use, what time frame you use to enter, how you get your sniper entries. I really appreciate it. I'm Mr. Unorthodox. Keep thinking outside the box. Peace out.